Well, I'm Jagendra Rana. Topic for our discussion today is customer-centric growth strategy. Customer-centric growth strategy. See, India's insurance sector is a remarkable growth story. For the past 20 years, demographic shifts, rising consumer awareness, improved distribution, and enhanced efficiencies have created opportunities for growth and bought protection to millions of people. So, with the regulatory support from the Insurance Regulatory and Development Authority of India, India is projected to the fastest growing insurance market among G20 countries from 24 to 28. Now, IRDAI's goal of enabling insurance for all by 2047 goes a long way towards closing the insurance adoption gap and addressing the needs of a diverse population. So as we enter this new phase of growth, customer-centric strategies will be in focus in 2025 and beyond. So insurers must align their strategies by focusing on accessibility, affordability, and exceptional customer care. This vision of success hinges on a holistic approach that addresses evolving customer expectations by leveraging advanced technology and fostering innovation. So banks in India played a pivotal role in successfully implementing Pradhan Mantri Jan Dhan Yojana since its launch in 2014. So bank assurance is a game changer. The government's flagship financial inclusion scheme has resulted in the opening of more than 54.40 crore bank accounts by banks. The public sector banks are the key drivers of the scheme as they opened about 42.4 crore accounts, bringing masses under the ambit of banking. It was followed by regional rural banks, 10.15 crore accounts, and private sector banks, 1.68 crore accounts. So this Pradhan Mantri Jan Dhan Yojana and public sector banks have also been instrumental in implementing government schemes like the Pradhan Mantri Jeevan Jyoti Bima Yojana and Atal Pension Yojana. So banker insurance, a strategic alliance between an insurance company and a bank, has emerged as a critical enabler in expanding life insurance penetration, particularly in semi-urban and rural areas where life insurance companies do not have a presence. The banker partnership allows insurers to tap into the established customer base of trusted banks. It also helps insurers to offer easy, simplified, and tailored solutions for individuals who may otherwise remain unserved. So as bank assurance efforts grow, more customers will have access to a wider selection of insurance solutions that align with their financial goals and life stages. Then customer-centric regulatory advances and tech-driven innovations are also there. The life insurance sector in India is all set to enter an exciting phase driven by a combination of regulatory advancements and device technology. So facilitating the transformation as insurance regulator, IRDI, which has introduced initiatives like digital Know Your Customer, Aadhaar-based video on KYC, or central KYC, which simplify both customer onboarding and claims processing and reduce paperwork for purchasing or managing policies. The IRDAI's Master Circular on Life Insurance introduced customer-friendly measures like extended free look periods, simplified customer information sheets, policy loans on savings products, and even partial withdrawal on personal products, pension products. So the IRDI has also delegated decision-making powers to the Product Management Committee, a move that has shortened the product clearance timeline and accelerated product innovation. So looking ahead, platforms like the upcoming Bima Sugam, an ambitious project of the insurance regulator to create an Amazon-like one-stop digital platform for buying, selling and servicing insurance policies, are expected to be rolled out shortly. Such efforts, coupled with the introduction like higher special surrender value for endowment policies, encourages long-term financial planning and provide greater financial security. This move would significantly increase the premium amount returned to policyholders when surrendering their policies, contributing to their financial security with rupees 2,42,699.18 crore in maturity benefits, rupees 2,29,245 crore in survival withdrawal benefits across both individual and group segments, and rupees 42,284.21 crore in death claims processed in financial year 24 alone. But the life insurance industry continues to uphold its role as a cornerstone of social security and is steadily moving towards the vision of insurance for all by 2047. So India's path to universal insurance coverage is both challenging and promising. However, it can be achieved by giving impetus to customer-friendly strategies, embracing technologies and following the right regulations. As insurers continue to innovate and simplify processes, customers will see more personalized products and easier way to get coverage. So by deploying cutting-edge customer-centric technology and with the combined efforts of stakeholders such as insurers, regulators and policyholders, India can overcome stumbling blocks and pave the way for more inclusive and accessible coverage. And see, the central government may more than double the insurance coverage under this its scheme, that is the Pradhan Mantri Jeevan Bima Yojana and the Pradhan Mantri Suraksha Bima Yojana in the upcoming budget. The budget is already over and this is also expected because this initiative aims to strengthen financial security, especially for individuals from economically weaker sections, while advancing the vision of insurance for all by 2047, ensuring comprehensive insurance access for every individual and business in India. The people mentioned above that proposals are under consideration to increase the life cover under Pradhan Mantri Jeevan Jyoti Bima Yojana, one of the government's largest life insurance programs, from the current limit of rupees 2 lakh to 5 lakh rupees. So the first person mentioned like this. Because the proposed changes aim to address the insurance protection gap by offering higher coverage, ensuring that insured individuals or their dependents have adequate financial support to meet their obligations. to meet their obligations. So this way good developments are taking place in the insurance market. And now the opportunities are plenty because India's insurance sector has long been characterized by high potential, underpinned by a large and underpenetrated population. However, its performance has been moderate at best due to factors such as low awareness and financial literacy, product complexity or relevance. So strict regulatory standards, slow pace of technological adoption and generally poor affordability. So in its current phase, however, a convergence of favorable factors may have led the sector to an inflection point. India's per capita GDP is expected to rise significantly by almost $2,000 to reach about $4,730 by 2029. Proactive regulatory measures like the IRDAI is balancing a twin agenda for facilitating sector growth with policyholders' protection. Upcoming regulations are expected to augment growth. Then from the launch of Aadhaar in 2009, DPI and Aadhaar has come a long way, especially with UPI showing significant success in rural and semi-urban areas. Insurance market participants are rising to the challenge with investments and innovations across products, distribution and technology to digitize and modernize the sector. The Bima Vahak, Bima Bistar initiatives are particularly interesting for their potential to enhance rural coverage exponentially. The scheme aims to have Bima Sevaks, women-centric distribution force, deployed to all 250,000 gram panchayats across India and specific coverage targets for lead insurers for each state. However, their success will depend on effective training, product design and technology uses. So the success of Bima Sugam will be contingent on its customer experience design combined with a robust technology infrastructure. And the rise in the foreign direct investment capped to 100% will boost market expansion. However, more clarity is needed on the fair market value of FMB clause under the Foreign Exchange Management Act. Regulations for foreign players to find market entry more attractive. Currently, the minimum capital requirement for setting up an insurance company in India is Rs 100 crore. This move will allow market entry for smaller, niche, more specialist players in the market. However, it is important to balance sector growth with stability and to protect the customer's interest. In this case, therefore, IRDAI must build a robust framework to conduct tests on the business models of the potential entrants and ensure that corporate governance requirements are adhered to have continuous regulatory oversight. So allowing the insurance purchase under one roof will significantly improve customers' convenience, potentially improving efficiency and making the market participants more profitable. But the success of this move will hinge on a clear and simple regulatory framework and guidelines to manage associated risks. Then the insurance sector has significantly raised its investment in technology in recent years, with almost all large market participants making large investments. Most recently, LIC reported earmarking Rs 600 crore for its digital shift. However, business will have to embed the digitization and technology as a part of their core business strategy for the sustained transformation. In an increasingly digital, data-driven world, companies are building product strategies to allow for tailor-made or hyper-personalized products rather than the traditional one-size-fits-all approach. Insurers, though, will need to build customers' trust to collect data about their needs and preferences. They will also need digital and technology capabilities to create another data-based products and be able to distribute from efficiency to right segments at the right place. So with the right foundational blocks in place and increased relative clarity, the industry is now uniquely positioned for growth. The regulator has shown its willingness to act as a partner and a facilitator for the industry to help achieve its vision of insurance for all by 2047. So while this goal is ambitious, the recent actions of the industry inspires much confidence that they will be able to rise to meet this challenge. Achieving this goal will be a monumental achievement for India, providing much needed protection for its masses and paving the way for a more secure and prosperous future. Thank you very much.